Good day, ladies and gentlemen. I will be dealing with accrual basis today, and I will be constructing this accrual basis explanation out of my own random numbers just to explain the concept of accrual basis. Remember, when we say accrual basis, we are referring to the accrued income, accrued expense, prepaid expense, and income received in advance. So 4 things that I will be explaining today that are very crucial in the life of an accounting student, and as you become a professional accountant or a CA, you must master these basics for the rest of your life. Now let me just start with one of the expenses that we know. Let us say we have rent that is paid, and we know that the minute we pay rent, then obviously this is not an income but an expense. Now, rent paid, immediately when the rent is paid, cash will go out of the business. Then when cash goes out of the business, we are going to say debit rent expense. Now this is a general journal. Now let me just skip a line. This is a general journal where we have a debit and we have credit. In the general journal, we are going to say debit rent expense, because we have paid for this rent expense and the amount will be 13,000 rands. Because money was paid and decreased our asset called bank, then we are going to say 13,000 rands because money went out of the bank of the business. Then there will be what we call a ledger account. Now I want to focus only on the rent expense, not on the bank part, because I want to explain the accrual basis. Now under rent there will be 13,000 recorded on the debit side and the contra entry will be bank. Then after, we are going to transfer this amount into what we call a trial balance, from a general journal into a ledger account and into a trial balance. So now this will be the amount of rent that will be transferred into what we call a trial balance. Now let me show you what a trial balance is. A trial balance has a debit and has a credit. It's something like this, but it has 2 columns. It has 2 columns, a column of the debit and the column of the credit. Now in the what we call a trial balance, and this is called a pre-adjustment trial balance. Under the pre-adjustment trial balance, there will be something or a line item called rent expense. And rent is an expense and it increases on the debit side. So now we will be transferring the total of the rent from the ledger account into the debit side of the trial balance. Then after, now there will be what is called additional information. Sometimes it is called adjustments. Additional information which will make you to do some of the adjustments. Then now under additional information, they will say to you that rent per month is 1,000. I'm just assuming that rent per month is 1,000. So now in other words, we are going to say if rent per month is 1,000 and we're supposed to have paid rent for the full year, then how much rent was supposed to be paid? So now we are going to record or do what we call rent expense. Now, when I'm saying rent expense, I then have to go back and do one adjustment on what I've done previously, which was good for that matter. This is not a rent expense, to be honest, but it is rent paid. But still keep it as rent expense, there's nothing wrong. Now, this is the amount that is paid. Then I will need to know how much rent expense or rent that was incurred, meaning rent that we're supposed to have paid. Rent that we're supposed to have paid will be an amount of 12,000, because we are assuming that we were in this rental agreement for the whole accounting period. So 1,000 times by 12 will give us 12,000. That means this is the rent that we're supposed to pay. Take note, it's the rent that we're supposed to pay. but we have paid rent of how much? 13,000 rands. That means the rent that is reflected in our rent expense account is overstated in terms of the income statement. Now, in the income statement, meaning the statement of profit and loss, let me say statement of profit or loss. In the statement of profit or loss, we are going to record rent as the total amount of 12,000 rands. This is what will be recorded in the income statement, 12,000. Why 12,000? Then now I will be answering you on that question. We are saying the rent that we're supposed to pay is 12,000, meaning the rent that will be recorded in the income statement. Then we need to say how much rent is paid. We already know that rent that is paid, which has already been recorded in our books, it is 13,000 rands. It doesn't matter, guys, which one becomes negative, but you just need to subtract one from the other one. So now that means we can see that rent is overpaid by an amount of 1,000 rands. So now we paid more than what we're supposed to have paid rent for, because we're supposed to have paid a rent of 12,000 rands. But we can see in the trial balance that the rent that is already paid is 13,000 rands. Now I always highlight the fact that expenses that are in the trial balance are expenses already paid, and incomes that are in the trial balance are the incomes already received, unless stated otherwise, and again with exception with sales revenue or sales income, because we can sell on credit. I want to highlight that, because if you sell inventory on credit, that does not mean you have received money, because a credit sale means you have sold something on credit. So now we are sitting with this 1,000, which is prepaid rent expense, meaning we paid this rent for more than 12 months, prepaid rent expense. So now if this is our prepaid rent expense, it therefore means that we paid more than what we're supposed to have paid for. And a prepaid expense is an asset. Anything that you pay before time is an asset. In other words, they could have said under the adjustment that the rent was paid for 13 months. They can say that. They cannot say rent per month is 1,000. Sometimes they can say rent was paid for 13 months. Therefore, now we have to say divide by 13. Then you'll discover that rent per month is 1,000. Then you say, if rent per month is 1,000, how many months was the rent supposed to be paid? 12 months, assuming that we were in this contract for rental for the whole year. Therefore, now meaning rent that you're supposed to pay will be 12,000. Then after we say the rent in the trial balance is overstated by 1,000, and this 1,000 will indicate that the rent was paid before time. Now a prepaid expense is an asset. So now how do we record the 1,000? Remember, the 13,000 is already recorded when cash was paid, because the payment took place. And if you remember, we said debit rent expense 13,000, credit rent when the transaction took place. So the 13,000 of the bank was recorded. But now what are we focusing now? We are focusing in this 1,000 to say included in this 13,000 there is 1,000 that belongs next year and not in the current year. So now how do we account for the prepaid expense in the general journal? So now you are likely to be required to do a general journal for the prepaid expense. In this case, we'll have to say, remember I highlighted that a prepaid expense is an asset. Take note of that, it's an asset. And assets increase on which side? On the debit side. So now we'll have to say prepaid rent. Then it will be an amount of 1,000. Remember now bank is not affected, because when the transaction took place 13,000 was affected and bank was affected. But when we record in the prepaid expense, we are not accounting for the bank because bank was already recorded for. So now we'll have our rent expense as 1,000 rands, and we do have rent expense here as 1,000 rands. In other words, we are saying the rent, which is an expense, must be decreased by 1,000. Remember, expenses increase on the debit side. In other words, if we are saying rent expense must be credited, we are, in other words, instructing that the 13,000 must be decreased by 1,000 so that it becomes the 12,000 it was supposed to be recorded in the income statement. So now this will be very, very important. Now, when once again we are recording this in the statement of profit or loss, I think I did have one line somewhere there. There was a line where we record in the statement of profit or loss. Okay, I erased that one. Now, when we record in the income statement, or the statement of comprehensive income, we are going to have a line item that says rent expense. And I think you know my approach, that you take all the amounts that are from the trial balance first of all. You record all of them. So that means the 13,000 from the trial balance would have been the first amount to record, and you say 13,000 rands from the trial balance. Then you say minus 1,000. Why? Because expenses decrease on the credit side. And when I'm saying credit side, please know that this is there are lines here in between. This is debit and this is credit. So that is why now the 1,000 becomes negative, reducing the 13,000, so that our rent expense in the statement of profit or loss and other comprehensive income will be 12,000 rands. So now this will be the income statement. Now the entry on the debit side, remember this is an asset. Where do we record assets? We record them in the statement of financial position, which previously was called balance sheet. So now this will be recorded under current assets. Under current assets, it will be recorded under receivables, under trade and other receivables, which we call them debtors sometimes. So now the 1,000 will be recorded there. If there was another amount already, this will be plus 1,000 because it's an asset. So this is what we call a prepaid expense. Prepaid expense is an asset. Then we go to scenario number 2. My example number 2. Example number 2. We still have the same rent. Then we say rent paid. Rent paid 10,000. This is the amount of rent that we have paid. And we know that immediately when that was paid, we would have said debit rent expense. Debit rent expense when the rent is paid by an amount of 10,000. Because this was a payment, so bank will be affected. So now this will be a credit of 10,000 rands. Then I will say this rent was paid, therefore now we must open a ledger account for rent expense. We start with the general journal, transfer from the general journal into the ledger account. So now there will be 10,000 on the debit side of the ledger account, and the contra entry will be bank. Then after, I will have to record this in what we call a trial balance. A trial balance. Then in the trial balance, we are going to have rent expense. Remember, I said to you that in the trial balance, when you see amounts in the trial balance with regards to expenses, are the amounts already paid. So now that means the amount of rent that we will be seeing in the trial balance of 10,000 is the rent already paid. Now there will be additional information. Sometimes they can say rent is paid for 10 months. It depends to what they can say to you. Now they can say yes, rent is not paid for the last 2 months. So in this case, let me just use the basic one. Rent expense is 1,000 per month. Now I'm just simplifying it. They can put it in any other way and say rent was only paid for 10 months. So now if they will say rent is only paid for 10 months, that means we have to divide here by 10 so that we get to know how much is the rent per month. Therefore now we multiply by the number of months the rent was supposed to be paid. Remember once again, the assumption is that the rent agreement was the beginning of the year. That means we're supposed to pay rent for the full year. So now we have to say how much rent expense was supposed to be, meaning rent that's supposed to go to the income statement, meaning rent for the full year is supposed to be how much? It will obviously be 12,000. Then you say 12,000 is what was supposed to be paid. Then you say how much rent is paid. Rent that is paid is 10,000, meaning the one that is in the trial balance. Then you say now, did you overpay rent or underpay rent? We have underpaid rent by an amount of 2,000 rents. So now we paid 10,000 instead of 12,000. The previous one we paid 13,000 instead of 12,000. Now in this case this will be accrued. This will be accrued rent expense, meaning rent not yet paid. Remember, the word accrued means not yet. The word accrued means not yet. That means in the case of the expense, it's an expense not yet paid. That means we're supposed to have paid for this expense, but we have not yet paid for it. So now that means an expense that is supposed to be paid but not yet paid then becomes a liability, because it's something that we are liable to pay but we have not yet paid. Now I want to highlight that in the income statement, how much are we going to record? In the income statement we are going to record the amount that was supposed to be paid. Remember, the term accrual basis is the one, this concept accrual basis is the one that allows us to record expenses even if they were not paid, because accrual basis says we must record expenses that were supposed to be paid, not those that were actually paid in the income statement. So now that means in the income statement we are going to record the amount of 12,000 rands, which is the rent that was supposed to be paid. Then now the difference will be treated as an accrual amount. Now we are saying that 2,000 is accrued, meaning amount not yet paid but was supposed to be paid during this period. Therefore now we say this is accrued expense, and accrued expense is a liability. So we agree on that. Therefore now we need to record a general journal for this. General journal will debit. Remember, this is a liability. We need to debit our rent expense. Remember, your intention, guys, is to increase the amount in the trial balance so that it can be equal to the amount that is supposed to be recorded in the income statement. So now that means the intention is to increase the 10,000 by 2,000 so that it becomes 12,000 that must be recorded in the income statement. Similarly with the previous one. In the previous one, the intention, remember, the intention was to decrease the 13,000 because it was more in the previous question. The intention here was to decrease the 13,000 so that it becomes the 12,000 which was supposed to be recorded in the income statement. So now hence now we had to say minus 1,000. And in order for us to say minus 1,000, we needed to credit the rent expense because rent expense decreases on the credit side. That is why now rent expense was credited. And at the same time, prepaid expense is an asset. So this ought to be debited. So now similarly in this case, we need to increase our rent expense, and the rent expense and expenses increase on the debit side by an amount of 2,000 rands. Then after we credit our accrued expense. accrued rent expense. And our accrued rent expense is 2,000 rands. Remember, accrued expense is a liability. Now, if you were doing the statement of profit or loss and other comprehensive income, which is the income statement, if we're doing income statement, then you would have a line item somewhere there that says rent expense. And you would have taken first the amount that is from the trial balance, which is 10,000, amount already paid. You would have said 10,000 rands. Then after we say plus 2,000 rands. Why plus 2,000 rands? It is because the 2,000 rands is increasing our rent expense. You can see that an expense is debited and expense is increased on the debit side. So that's why this will have to be 2,000, so that we have to record the entire 12,000, which is rent expense that was incurred or supposed to be paid. Now the other entry, which is the entry on the credit side, this is a liability and it's a current liability. So now this will be recorded in what statement? In the statement of financial position under liabilities. And under liabilities it will be current liability. Under payables, if you remember, under payables, under trade and other payables, we'll have to say plus 2,000. Why plus 2,000? Because our liabilities are increasing by 2,000, because at the end of the current year we are owing an amount of 2,000, meaning we are liable to pay 2,000, but we have not yet paid this 2,000 by the end of the current year. So now hence this will be a liability and increasing our liabilities. Now this is example number 2. Let me now go to example number 3. Just erasing the past thing that I've recorded. Just forgot to erase them. Clear, now everything is clear. Now we are going to the third example. Example number 3. Under accrual basis. Example number 3. Example number 3 is still the same rent. The same rent, but the language now is changing. Rent received 14,000 rands. Take note, in this case we are receiving the rent, we are not paying the rent. Rent received, we have received the rent of 14,000 rands. Now that we have received the rent of 14,000 rands, obviously money came into the business. That means we'll have to say debit bank, and the bank amount will be 14,000 rands because we received 14,000 rands. Then I will say our income will increase. Rent income or rent received 14,000 rands. Remember, there's a slight difference between received and income. Now this will be recorded now in the ledger account under rent income. There will be a ledger account called rent income, and we know that incomes increase on the credit side. So now there will be a contra entry here that says bank. Remember, for every debit entry there should be a credit entry. This will be 14,000 rands. And this amount will be transferred into what we call a trial balance. And a trial balance with its 2 columns, it will be like this, and there will be a line there. Then after I will have our rent income, and it will be on the credit side because incomes increased on the credit side. And once again, the amounts, which is this income that you see in the trial balance, is the amount already received, and we received the 14,000 rands because money was received. So the amount of the income that you see in the trial balance is the amount already received. So we have received already 14,000 rands. Now there will be what is called additional information once again. There will be additional information, and remember, additional information is the one that will tell you how much rent was supposed to be received. Additional information will tell us how much amount of rent was supposed to be received. Then this will say rent was received. Let me just use a simple example. Rent was received for 14 months, or rent was received for January, meaning the next month of the first month of the next year. Most of the time they will say that rent was received up until January next year, and the accounting period ending in December current year. So now obviously that will be income received before time, which is called income received in advance. So now let me just use the short one. Now let me just simply explain this one. If they say rent was received for 14 months or for 13 months, not 14, for 13 months, which is including the next month of the following year, that means we divide by 13 to find out that rent per month was supposed to be, or is 1,000 rands. But the one that we see there is for 14 months. No, it's the 14, not 13. Because I want to simplify to keep it as simple as 1,000. So that will be rent received for February, for the next month of the next accounting period. So now that means we divide by 14, we get to rent per month as 1,000. But I don't want to use the number of months because I will have to write a long sentence. Now let us just say, as we used to say, rent per month is 1,000 rands. Rent per month is 1,000 rands. So if rent per month is 1,000 rand and we're supposed to receive a rent of 12,000 and we receive the rent of 14,000, then obviously the rent we received is for 14 months. We can say that. Hence they can tell you that sometimes. Or if the accounting period ends in December, they can say rent was received up to February next year, and you can identify from there that then this is for 14 months, because an accounting period or a year is a normal 12 month. Then I will say this is the rent that you're supposed to receive, which is the rent of 12,000. Then you say how much rent have we received? Rent received is 14,000 rands. But the rent that is supposed to be received is 12,000 rands. We can say that we received more rent than we're supposed to have received it. So now the 2,000 will be rent received in advance, or income received in advance. Rent received in advance. And rent received in advance, or income, you can say income received in advance. We normally say income received in advance, but in this case, I know what income is. I know what this income is. It is rent. So now the rent received in advance is a liability. It's a liability. Liability. Why am I saying this is a liability? It's because we received money this year, yet it belongs next year. Now, if the tenant can decide to say, no, I'm not going to stay for the month of January or February, we'll have to pay back the tenant for the full amount of 2,000 rands. Now, on condition, now all the requirements of the notice of vacation have been granted before time. Now, that will mean now we will have to pay the 2,000 back to the tenant if the tenant decides to leave before time. But now in this case, we have a 2,000 that is received before time, which is income received in advance. And again, in the income statement, we are supposed to record an amount of 12,000 rands. Remember, we record in the income statement incomes that were supposed to be received, not the income that was actually received. If what was actually received is above or less than what was supposed to be received. So in the income statement, how much will be recorded? In the income statement, we are going to record the amount of 12,000 rands. That is not going to change. This will be the amount of the income statement. Now, if we're supposed to record 12,000 rands, we already do have 14,000 rands in the trial balance. What do we do with the 14,000 rands? the 14,000 rands must be reduced by 2,000 rands so that it becomes the 12,000 rands. Why do we reduce by the 2,000? Because 2,000 is the amount that was received before time. Now, which means now we can do the general journal. What do we do in the general journal? Debit rent income. Why do we debit rent income? Because when we debit rent income, we are decreasing the income, because incomes increase on the credit side and they decrease on the debit side. So now the minute we say debit rent income, in other words, we are saying reduce the rent income by 2,000 rands. So that when you say minus 2,000 rands from that 14,000 rands, we get to 12,000 rands, which is the rent that was supposed to be received of 12,000 rands. That will be recorded in the income statement. Now, with that, let us then record the rent income. Rent income of 2,000 rands. Then we say income received in advance will be the contra entry. Remember, income received in advance is a liability. So obviously it has to be recorded on the credit side, because liabilities are increasing on the credit side. So this will be rent received in advance, or income received in advance. Rent received in advance, 2,000 rands. Now, how do we record this now in the income statement? Remember, now you are doing the statement of profit or loss and other comprehensive income, which is income statement. There will be a line item under other incomes, because now this is income now. Under other incomes, this will be 14,000 rands. Remember, we always start with the amount that is from the trial balance, the amount already received. And to say the amount already received is 14,000 rands, but we're supposed to receive 12,000 rands. Therefore, we need to decrease the 14,000 rands by 2,000 rands, so that it becomes 12,000 rands, the amount that was supposed to be received. Now, from the general point of view, the debit side says rent income is debited, and incomes are recorded in which statement? Are recorded in the income statement. So this is the income statement item, and we must record this in the income statement. It will be recorded under rent income, and incomes decrease on the debit side. That is why this became negative. Now the credit side is a liability. It must be recorded in the statement of financial position under current liabilities. Then under current liabilities, it will be recorded under trade and other payables. This will be under trade and other payables, or under creditors. So this will be where the 2,000 on the credit side will be recorded. And I've done that also in the previous questions. Now let me go to the last scenario. The last scenario, I'll use the blue ink. It's example number 4. Did I say example number 3? Yes, example number 4. Example 4. We have the same rent. Rent received. Now we are receiving, remember? Rent received is 11,000 rands. We received 11,000 rands. Then now we received the money. Immediately when the money is received, we are going to say debit bank. Let me just leave a line here because it's two different things. We are going to say money is received. Debit bank, 11,000 rands. Credit rent income. Credit rent income, 11,000 rands. Then after, there will be a ledger account for rent income. I want to show you all this order. How does all this information, or where does all this information come from? Then after, there will be bank, 11,000 rands, because rent is an income, and incomes increase on the credit side and they decrease on the debit side. Then there will be what you call a trial balance. Then we'll have a trial balance, which is normally a pre-adjustment trial balance with the debit and credit. Remember, this amount is from the credit side of the trial balance, so it will have to be recorded as such. So a trial balance will be like this with two columns. Then there will be a line straight there, and there will be a line item called rent income. Rent income, because this is from the credit side of the ledger account, then it goes straight to the credit side of the trial balance, 11,000 rands. So now remember, most of the times, in fact all the times, the minute you are given a trial balance, all this will not be there. Please take note of that. This will not be there, and you must not do this because it's done already. What you are given is a trial balance, so you can apply the same principle in the previous ones. All this will not be there because it's done and dusted, and we have transferred straight into our trial balance. So all the above will not be there. What you'll be sitting with will be a trial balance, a pre-adjustment trial balance. And after the pre-adjustment trial balance, they'll give you what you call additional information. That's it. Then you work from there and you go forward. And you record general journal, then after you record in your financial statements. So please be aware of that. But now I'll still keep all this as they are so that you know where things are coming from. That's why I'm bringing all this background so that you understand comprehensively. When we are given a trial balance, where are we coming from and where are we going? Now we have a trial balance. After the trial balance, we know that there will be additional information, additional info. I'm not going to write everything now. We know that is additional info, and we already know what I'm going to say. They will say the rent was received for 11 months. We already know that, and they will say the same thing that you know also when it comes to your assessments. Now they will say rent was received for 11 months, or rent for the last month was not yet received, you see, which is accrued. Now that will be the language or the popular language. So now that means they can tell that language, but I want to use the very, very simple one. Rent per month is 1,000 rands. And again, if they say the rent was received only for 11 months, then you divide by 11 to get the rent per month. Or when they say the rent for the last month was not yet received, or they can say the rent of 1,000 for the last month was not yet received. That means we already know that this is accrued. That means rent not yet received. Remember, the word accrued means not yet. It could be not yet received in the case of the income, or not yet paid in the case of the expense. Now we say rent rent income. Don't know why I'm thinking of an expense now. Rent income will be 12,000 rands. Where that it is 1,000 times by 12. Then after we say rent that was received, is an amount of 11,000 rands. Then now we are comparing what was received from what was supposed to be received, and we can say that we received 11,000 instead of 12,000 rands, and we know that we supposed to receive 12,000 rands, and we are also under the assumption that we were in this rental agreement since the beginning of the accounting period. So that means the rent that was due to us was the rent for the full 12 months. So now this will be not yet received. Therefore now that will be accrued. Accrued rent income. Now remember, the word accrued means not yet. That means in this case not yet received or receivable. Now it will be not yet received or receivable. And anything that is not yet received is an asset, because this tenant is owing us money. It's an asset. There's a probability of the inflow of economic benefits that are expected to happen in the future. Now, which we do have control over it. Then that's the definition now of an asset. I'm already in the definition now for those who understand the definition of an asset. Therefore, now we must record this amount of 1,000. I want to remind you once again, the amount in the trial balance is less than it was supposed to be, meaning we're supposed to increase this by 1,000 so that it becomes the 11,000, the 12,000 that is supposed to be. That means the rent income must be increased on which side? On the credit side, because incomes increase on the credit side. That means rent income must be credited. That means rent income must be credited by an amount of 1,000 rands. And we are to debit accrued income or accrued rent income. Accrued income by an amount of 1,000 rands. Remember guys, when I indent or when I shift a sentence or my writing inside, it indicates credit, in case you did not understand that. So hence I don't normally write the DR and the CR here. This indicates debit, another one the credit. The one that is on the far side indicates a credit. Now we are to record, remember, in the income statement. First of all, how much will go to the income statement regarding rent income? It will be 12,000 rands, not 11,000 rands, because we record incomes that were supposed to be received in the income statement. So now that means, again, when we do the statement of profit or loss and other comprehensive, which is called income statement, we'll have a line item under other incomes. Under other incomes, there will be a line item that says rent income, and you would have started by recording what is from the trial balance, because that is what is available at stake so far. So you would have first recorded 11,000, and you say the 11,000 is underestimated by 1,000 rands. So we should be increasing this by 1,000 rands and becomes 12,000 rands. Then now this is the debit side of this entry, where we have this is the credit side of this entry, where we have credited our rent income, and incomes increase on the credit side. If you remember, there I told you that incomes increase on the credit side. So now when the income is credited, it indicates that that income must be increased also. So now this also is the reflection of the credit side, the reflection of the credit side, which is the plus side of the incomes, meaning where the incomes are increasing. The last one is the debit side, is accrued income, and we said accrued income is an asset, and assets increase on the debit side. That's why assets are increasing, but I'm not focusing on the debit side now, but they're increasing on the debit side. When you do the statement of financial position, this will be under assets. If you remember, under assets we have current assets. Under current assets, it will be under debtors or trade and other receivables, depending to what is provided, or under receivables or trade and other receivables. The amount of 1,000 will be added there because it is on the debit side of the general journal, and assets increase on the debit side. Thank you guys. Yeah, this is what I wanted to bring across. It's very important for foundation of financial accounting, more especially when I do the financial statements. You'll see that I will be using all the general journals from a trial balance and doing the adjustments, and it's exactly the same things: the income received in advance, prepaid expense, accrued income, and accrued expenses. Thank you guys very much. You've been a wonderful audience. Please don't forget to visit us at www www.unlockaccounting.co.za to get more insight on how we teach. Thank you guys. You've been very wonderful to me so far. Thank you.